In terms of what I'll cover over the next 120 odd minutes, of course, I'll leave a lot of time for discussion, is, these topics where I'll talk about why India presents a huge opportunity for practitioners of forensic accounting or fraud investigations work. I will also talk about what is the profile of a fraudster. I will talk about why at all it is important for us to be aware of that. I will cover technical elements of how one goes about an investigation. What are the various investigation techniques? They say prevention is better than cure. So how do you prevent and detect frauds rather than just responding to them? I will talk a little bit about that also. Because this group is comprised predominantly of chartered accountants, I think it's important that we talk about financial statement fraud, because there are other kinds of fraud also, right? It's not just financial statement frauds that I will cover today, because there are frauds in the area of cyber, which I will touch upon a little bit. There are frauds in the area of intellectual property theft. There are bribery and corruption schemes, both outbound and inbound. So I'll try and cover a varied cross section of what practicing CA can do. The very and most important thing is in terms of what exactly do you need to do when you talk about market intelligence and covert ops, what we call going into the field and gathering intelligence from targets, from potential people who pose the risk of fraud, right? So, for instance, if you're talking about a vendor, or if you're talking about an employee, or if you're talking about potential borrower of a bank, right? How do you go about gathering information which is available outside the financial statements? How do you gather that from the field through doing market inquiries and doing market intelligence searches? And finally, forensic interviews and interrogations. What is the distinction? How do you go about it? What are the do's and don'ts? I'll cover all of these, and case studies. As we finish this, I will also cover key mitigations, right? To what extent should we implement these in the companies that we are either auditing or doing, stat audit or internal audit or even tax kind of work? So what are the risks that can be mitigated and how should one go about it? So essentially talking about quick wins. So that's broadly my coverage. That's the intention that I have. And when doing so, I will also talk about the various ways in which a chartered accountant can get engaged in this sort of a profession. I came into this profession by accident. Way back in 1992, when I started my articleship, there was this Harshad Mehta security scam. I'm sure all of you would have come across it, where there was this broker on the Bombay Stock Exchange, very well known, very well written about, who was known for his purchase of shares of Mazda, ACC. These two companies were his favorites. And he was also known for his, I'm sure all of you have seen the movies in mainstream Bollywood and otherwise on, Netflix and other places, where he had his, fleet of cars. He had a huge house. So he was really attracting a lot of media attention. As it turns out, there were frauds with regard to, bankers' receipts and, other ways in which he had raised money to make these purchases through fraudulent documentation. And of course, that case went through its own set of this. So I had been involved in that particular investigation. So back in the day, forensic itself was not really a very big area of work. But luckily for me, in the course of my articleship, I got an experience to work in that area. And that piqued my interest. And I think by nature, I'm also very inquisitive. My family keeps wondering why I ask him so many questions. And that comes very naturally to me. So I like it when I get questions in return, because I'm usually the one asking the questions. So it's good to be, facing a barrage of questions from people for a change. So that's really about a little bit about me and about my coverage. So if you look at this, I'm sure you can see what I am showing on the screen. It's an iceberg, and like the saying goes, the tip of the iceberg, right? I'm sure all of us have heard that saying. And in case you wondered what that meant, it really means that the tip of the iceberg is the only visible part of the iceberg. It's only about 10-15% of the iceberg that is visible. I'm sure all of you would have seen the movie Titanic, and that the big ship Titanic actually sinks because of an iceberg, which is not visible clearly. And similarly, for a fraud, the part that is visible does not look like a fraud. It looks like a red flag. It could be viewed as just an aberration, just a mistake, or just some internal control weakness and so on. So when you're doing an audit or an internal audit, if you find something, it might get easily brushed aside as a potential red flag and not necessarily a fraud, because the part that is hidden underneath, as you can see, is colossal. It is huge, and it is very, very different in size and dimension than the part which is above the water. And therefore, you cannot blame corporate management for believing that there is no fraud here, right? Board and the chief executive officer, the chief financial officer, it of such good controls that we have, and nobody, and I've implemented the best SAP system or the best ERP system. I've spent crores of rupees in developing the technology backbone, firewalls, and this and that, and I have an accomplished chief internal auditor. I have a big four firm of auditors, a barrage of team members doing my internal auditing care of. Everything is controlled, right? But guess what? In spite of that, you have so many frauds occurring in India. Not all of them, of course, come to the front page of Economic Times or CNBC. They remain hidden within corporate boardrooms. They remain hidden within companies because the disclosure is not required in all cases, and therefore you will not perhaps get to know the sheer magnitude of it. And that actually stems from the fact that fraud is concealed and it is hidden underwater, as you can see in this image, right? Not all of it is always visible. Some of it is visible, but when you look at the profile of a fraudster, I will cover profiling of a fraudster in some time. You will realize that a fraud is not discovered for a variety of reasons. Not only because it is concealed well, not only because it is something that is not the ordinary course of a person's audit process or audit procedure, but also because the people who perpetrate the fraud are also trying their best to cover it up. The fraud, as soon as it is discovered, or if you find something wrong, it's not necessary that the person who's on the other side will not defend it, right? The person will defend it. So if you look at the definition of fraud before 2013, the Companies Act that came in 2013 was the first such piece of corporate legislation which actually defined fraud. And what it talked about is a fraud is an omission, a concealment, abuse, and so on. It talked about intent, right? To gain an advantage or to injure the interests of who? The company, the shareholders, creditors, or any other person. Now, this is very interesting as a definition, right? I'm sure all of you can see it on your screen. It says there has to be an intent to deceive. So what does that mean? Does that mean that the deception should have actually been successfully executed? Or even the intent to deceive while in progress when the fraud is being perpetrated, if a person is caught, is that fraud? Yes, that is also fraud. To gain an undue advantage from. Now, undue advantage means that I am personally, so like we call it in the forensic accounting space, there is personal profiteering, right? So what that means is that if there is an element of personal profiteering, the way in which one actually executes the fraud is to line one's own pockets. Now, what this means is that if there is anything which is not going to benefit me, is that a fraud? So here is another interpretation of it, to say if it is to injure the interests of either the company, the shareholders, or any other person, it is also classified as a fraud, right? Now, it also goes on to say whether or not there is any wrongful gain or any wrongful loss, where wrongful loss means the gain by unlawful means, and wrongful loss means the loss by unlawful means of property to which the person losing is legally entitled. So for instance, if I've caused sabotage in a company, right, by doing ransomware attack or by bringing down their systems or deleting certain files, that is also in the definition of the Companies Act 2013, that is also classified as a fraud, right? So to that extent, you can very easily say that it's a very, very wide definition. And it's important to understand that, what is fraud is important to baseline, because when you're sitting in a company, you don't know whether it is fraud or if it's misconduct or if it's a mistake or if it's, done because of, a person might very easily say, but hey, you know what, I'm not benefited personally, so it's not fraud. Where have I earned money? Where have I made money on the slide? I'm not. right? So all these aspects are very important to keep in mind. So I think that's really the definition of fraud. So if you look at fraud under the Indian Contract Act, it's a very wide definition. But if you summarize in the last line that you can see, it's a false statement of fact by someone who does not believe it to be true, which means it is a misstatement, right? It should be made with the wrongful intention of deceiving another party to thereby to inducing him to enter into the contract on that basis. So basically, it's a false statement and it should be made with a wrongful intention of deceiving somebody else. Then it's a fraud under the Indian Contract Act 1872. So these are two pieces of important legislation which help us understand what fraud is. Now let's look at the impact of corporate fraud. Any questions so far from any of you?
Not yet.
Okay. So when you look at the impact of corporate fraud, of course, it makes headlines. It creates a lot of buzz. People talk about it in the local train, in the offices, at homes, people talk about it. But what it does to the company is it leads to a loss of reputation brand. It leads to loss of market capitalization. We've seen what has happened to companies where sometimes the auditor has resigned, or where a CXO has been fired, or something has happened where it's a public spat, right? All of this really comes out into the open, and a lot of the employees and their livelihood and everything is at stake. A lot of investors' money is at stake, right? Hard-earned money which people have invested in that business is at stake. So it leads to loss of customers and market share. It leads to loss of freedom of people involved, right? The management, the auditors. We've known what has happened in the Satyam fraud. The auditors were put behind bars. We've seen what has happened in, right from the Enron, Anderson. I'm sure some of you remember, if you are from that era, what happened to this company called Enron and what happened to this very, very iconic firm called Anderson. They both kind of collapsed and their managements were incarcerated. There's loss of legacy. Brand value created after years and years of effort goes to the dogs, right? It really, really goes down under. So I think impact of corporate fraud is multifarious, right? Now, if you look at when we talk about fraud, there are many companies that have either been targets of fraud or they have perpetrated in the public domain. I can't claim to have, or I cannot confirm whether or not I've investigated any of these. But the point of the matter is these are well-known companies and well-known brands which have been impacted very badly because of the risk of fraud that has impacted them, right? So key employees have left, and the companies have really, some of them not even survived this onslaught. So let's look at why fraud. And this is a very interesting study of psychology, and there are why a particular fraud takes place. Fraud takes place because of, if you look at the topmost left-hand side corner, this is called the fraud triangle. Okay, the fraud triangle. Then you have the fraud diamond, and then you have the fraud pentagon. I'll highlight the differences between the three of them. So imagine that you're a junior level employee in an organization, and you have a little bit of pressure in your life, right? I mean, of course, you have credit card bills to pay, you have bought a car, you have your EMIs to pay. Maybe you have got married and your spouse is saying, let's go on an international holiday, right? So those kind of pressures are there. Plus, maybe your mom or dad has retired, right? Your father may have retired, and there is that additional burden on you of financially supporting them. So that pressure is there, right? You have an opportunity, maybe, right? If you are an employee and you are in a position, you may be able to identify, and if you're smart, you may be able to identify opportunities where you can, get away with perpetrating a fraud and then concealing it, right? Because one must remember is that a fraudster never wants to get caught, because they want to continue living a normal life. They want to continue earning their regular salary or like a regular income, but they also want to make a little bit of money on the side. So they are very good risk managers, right? So they, just like in a money laundering transaction, they will be layering. They will protect themselves from the actual event, so that tomorrow if somebody stumbles upon this particular fraud, there is a likelihood that they will probably not be able to discover it. Or even if they discover it, they will not be able to associate their name with the fraud. So they will think, oh, we don't know who committed the fraud, but here is a fraud, let's fix it. So they will try their best to perpetrate and conceal it. So there is that second tip of the fraud triangle. And then finally is the rationalization, right? So I like to call this the Robin Hood principle. How does a person justify a wrong to be a right, right? So if you ask somebody, how does a dictator justify killing so many thousands of people? How does a corporate fraudster who's stolen thousands of crores and impacted the lives of so many people sleep at night, right? How do they go to bed at night and sleep comfortably? Similarly, if you look at a junior level fraudster, what? I was not treated right by the company. The company did not promote me. I don't make enough money. My boss doesn't treat me right. So there are multiple rationalizations that come up, which, you know, while they may be fair in the mind of the fraudster, they don't really justify that behavior, right? So in your operating environment, in the environment of the companies that you operate in, if these three elements exist, then the risk of fraud is there. It does not mean that everybody who has pressure, opportunity, and rationalization actually goes ahead and commits fraud. Why? Because of things like upbringing. So things like code of conduct, things like, the ability to differentiate between right and wrong. But once that thing is overcome, then a person is able to perpetrate a fraud, and thereafter it is very easy to keep doing more and more and more, because it's, you get instant gratification. You get money. Most cases it is tax-free money, and it is humongous amount of money. It is, right, maybe some cases it could be 50, 100 times their CTC, right? 50, 100 times their cost to company that they earn officially, they get out of perpetrating fraud. It could be more also. So let's look at the fraud diamond. What happens when you have fraud triangle and a person is matured, right? There is that element of capability. Besides your incentive pressure, rationalization, and opportunity, you have that additional layer of capability which the person gets in the way they perpetrate a fraud. They fine-tune their fraud. They, make it more sophisticated, implement more safeguards, right? It's like moving from a Maruti 800 to a slightly more sophisticated car, which has more safety features. It has 4 airbags. It has anti-lock braking system, ABS, and many other features which talk about more capability, so that individual becomes more adept, becomes more competent to perpetrate a fraud. In the third stage, the person becomes arrogant also, right? So the fraud pentagon talks about not only pressure, opportunity, rationalization, competence, but also arrogance. Now, this is a dangerous phase of a fraudster, because this is where the person has oftentimes reached a senior level in the organization. Usually, senior management fraud falls in this bucket, because the belief that the person by now has that I've been perpetrating fraud for the last 10, 15 years, I've never been caught. I've not been caught so far. So where is the element of today anybody coming and catching me? I'm above board. Nobody can touch me, right? That belief comes in the mind of the person. And this is where they start perpetrating or doing frauds of a higher value, greater frequency, right? Do it by throwing caution to the winds, right? So this is like, driving on the Mumbai-Pune expressway in your Ferrari without wearing a seatbelt at a speed of 300 kilometers an hour. Inevitably, 6 out of 10 times there'll be an accident and the person is going to suffer the consequences of that. So this is what you mean by the fraud triangle, fraud diamond, and fraud pentagon. Any questions so far, which allows me to drink a little bit of water now and then? Any questions from anybody so far?
Not yet.
Okay, I assume that silence means that you understood everything that I've asked, everything that I've explained. So it's a good sign. So we'll move on to the next one. So if you look at Transparency International, I'm sure some of you, if not all of you, would have a global organization which was founded by people who were earlier working with the International Monetary Fund. It is headquartered in Germany. And they come up with this perception index, which really captures the view of the world about different countries, right? In terms of how is it to do business in a country, and what is the level of corruption in that country? A country may have fabulous speed of just the corruption side of it, right? Like for instance, if in certain parts of Africa, if you want to, buy a mine, you may probably need to just give $10 million to the local government authority, and you can get your mine registered in your name the next day. That's extremely fast, right? Super speed of doing business. About the speed of business, but this talks about the corruption element, what it should be logically, right? So India's rank is in the 80s. So if you look at it, India is somewhere, between Burkina Faso and Morocco, right? You can see India's rank is 86. Can you see in this third column? It's here. Can you see my cursor?
Yes.
India's rank is here between
86.
Burkina Faso and Morocco. Now, these are, of course, very, very small countries relative to India, right? But if you look at other countries like Solomon Islands and Malta and Mauritius and all these countries are way above in terms of rank, like countries like Armenia and all of those. Smaller economies, of course, they're not in the top 5. But for a top 5 economy to be at this rank is a worrying sign, right? Because if you look at our peers, if you look at the other countries that are in the top 5, they are way above in the corruption perceptions index. And as India attracts more and more foreign direct investment, and you see a lot of countries and a lot of companies from those countries doing visits to India, trying to acquire businesses, trying to do greenfield projects in the country, they have to encounter this on a daily basis. Now, let me look at what has happened in the last many years, right? So if you look at what has happened in the last, yeah.
Just a quick query. This corruption perception index is for only public sector undertaking or country as a whole, including private sectors also?
This is predominantly for public sector.
Okay.
This is predominantly for public sector, but how far behind will private sector be? It's the quasi for the country,
Correct.
Because
True.
it's a perceptions index. If somebody, they like to say in corporates, I'm sure some of you or all of you would have heard this phrase, perception is reality, right? What that means is that if somebody says, oh, you know what, this guy is just a talker, doesn't do much, right? Or they say, oh, this guy, is not able to explain, articulate very well what he wants to say in client meetings, or the report writing skills are bad, right? If people make such statements about you, you may have 99 other great qualities that, classify you as a fabulous professional. But when somebody says this about you, people kind of broad brush it.
Yeah.
To say that, oh, you know what, India as a country has a problem, not just public sector, but also private sector. And it's not far behind. Let me tell you that as well. It's not far behind. Because if you look at private sector, I know of so many distribution models which are structured with the sole objective of doing bribery and corruption to procurement managers. So you'll have distributor margins given, discounts given to distributors for any product in the country.
Exactly. That's where I was also coming on.
Yeah. So you will see this happen in the private sector also. And while in the public sector, because of the Prevention of Corruption Act and all these acts that we have, there is a little bit of subterfuge, a little bit of trying to hide or cover up. In private sector, it is relatively more open. Let me also tell you that. It's more open because, Prevention of Corruption Act doesn't touch them. Unlike the UK Bribery Act, which talks about private sector bribery and corruption also, the Prevention of Corruption Act, even after the amendment, does not talk about private sector. Foreign Corrupt Practices Act also does not talk about private sector. It talks about government bribing, right? Government official.
Correct.
So if you look at it, if you look at India's rank also, India's rank in the Asia Pacific region is also not very high. These other countries are so small compared to India, right? Leave aside Japan, but the rest of the countries are quite small compared to India. But India's rank is way below. We are not in the top 10 also. So it's something that we should be, chartered accountants can bring a change into our, the client companies in terms of what we can do to help this situation.
True.
And, it's a matter of people pulling their own load, everybody doing their little bit, and then the whole country changing. That's what is going to take some, 25, 30 years for it to actually reach a level of some serious change or the needle moving significantly, but it should happen. Now, let me give you an example right? This is where I'll expect interaction. Okay, many of you not spoken yet, and I hope their mics can be unmuted and people can get an opportunity to answer this question. Let's look at an ethical dilemma. Okay, what is an ethical dilemma? Let me give a very simple example. An ethical dilemma is something that you know what the right answer is, but because of circumstances, you may not do the right thing. So let's take an example of leaving for a meeting in the morning, a client meeting in the morning. And of course, now after the pandemic, things have opened up in Mumbai, and there's a lot of traffic on the road. So you leave early in the morning, right? You have a 9:30 meeting, let's say in BKC. You leave home at, let's say, 7 in the morning. You sit in your car and start driving, right? Just then your car has a flat tire, right? You find a shop nearby, you get a guy to fix your tire. You already lost half an hour. You start driving some distance, it starts pouring heavily, right? Starts pouring heavily, there's water logging, there's traffic jam, and snarls, traffic starts building up. And you are somewhere near the Andheri flyover. You're getting late, there's water logging, so only 2 lanes are functional. You're trying to snake your way out of that point of congestion. You come to a point where you see the traffic signal turning from green to amber, and you are about 100 meters away from there. And just as you're coming to the traffic signal, it's about to turn red. Now you have a dilemma in front of you. Very, very split-second decision. Should I go ahead, press the accelerator and go ahead, or should I stop? Now you check your watch and you say that, okay, I'm just half an hour away from my meeting. I've already lost so much time. I should speed and go ahead and cross the signal. Now 2 or 3 things can happen. One, nothing will happen. You won't bang into anybody. No cop will catch you. You won't get meet with an accident. You will go ahead. You attend your meeting. No problem. There is an odd chance that someday you might bump into somebody. Another day, a cop will catch you. A third day, somebody might bump into another vehicle, right? Now, let's say a cop catches you. He'll say, "Chalo, chalo, baju mein lagao gaadi." You stop the car, and incidentally, you're going to deliver a presentation on, let's say, ethics and integrity. The cop says, "License dikhao," right? Instead of showing a license, you pull out a 100-rupee note. Now, this is the irony, right? You know what the right thing to do is. You're a professional, qualified chartered accountant who spent years doing things and, presenting, talking about these things. You know what the right approach is. But when push comes to shove, you yielded a 100-rupee note. When I was presenting this to somebody else, they said the going rate is not 100, it's 500 rupees for breaking a red light if you want to bribe a cop. But point is, this is a dilemma which people face daily in the course of business, and that's why frauds occur. Now let's look at this scenario. Imagine that you are the VP sales of a company called Alpha Corporation. You are due to succeed the president sales of the company when he retires in December 22. You have really worked your way up to the role of VP sales of Alpha. You are hoping to hear the good news of your promotion to president sales soon. So you are the successor, already you are aware. But of course, there are other competitors also, there are other contenders. But you are a star performer, the most senior among all the other people. So you expect to get promoted. Just then your phone rings, right? Just as you are daydreaming, your phone rings. And you receive a call from one of your largest customers, a government company based in Dubai, for their World Bank funded project in Central Africa, saying that your $200 million order for supply of various products is going to be cancelled due to performance issues relating to both delivery and product quality. So they're basically saying not only does your delivery not happen on time, but your product quality is also quite bad. So we'll cancel your $200 million order. Now, what is your immediate reaction? Panic, right? Panic strikes. You don't know what to do. You take the next flight to Dubai to meet the customer. You try your best to convince the customer, saying, we'll resolve things, we'll put more people, we'll streamline everything. He'll say, but I have told you so many times, I've written you so many emails, many of the emails you're not even bothered to respond. Today, when I'm telling you that the order is going to get cancelled, you have taken the first flight. Why did you not come last month when I spoke with you, right? I gave you a long rope. You did not make use of that long rope. So now it's gone. This project is gone out of your hand. So in spite of your best efforts, there is no impact, no effect on him, right? So now what you do, you are about to give up and walk away. Just then, the senior guy's assistant comes to you, running behind you, and he suggests a solution. He says, "Aapko agar pasand hai, if you like it, I will suggest a solution." He recommends that you hire a project management company to oversee the material supply and project implementation. and that the company charges a 5% fee for their services. So this seems like a very simple solution to what could be a radical problem for you, right? It could be a catastrophic problem for you. It's a simple solution. 5% fee. My profit margin must be like 40-50%. Middle East may I get better realizations. I pay 5% fee for their services. He also goes ahead, he's kind enough to suggest the name of a company called Pegasus Enterprises, who he says is a reputed vendor, right? He says he does this. He's very well known in the Middle East, project management company. When you make a few inquiries, you're a diligent person, you make a few inquiries, you learn that Pegasus Enterprises, coincidentally, is owned by the customer's son-in-law, who has helped suppliers in similar situations in the past. Now, this is a slightly edited real life situation where a company had this problem, and these are the three options that you have before you. Accept the suggestion of this particular assistant, as you have a lot at stake, since losing $200 million order would mean trouble for your career, right? You can see the writing on the wall. You will not make it to president sales because the shareholders are not going to like it. The promoter is not going to like it, and it's a bad reputation that you built. Let your customer know that you will hire the right project management consultant after following a due process. You know, you don't understand the seriousness of this matter. So you are saying, "Arey, we'll hire." No, why are you telling me? I will hire, we'll follow due process. It could take time, we'll come back to you, right? So you are in a totally different zone. Reality means that, you know, you are on the verge of losing a $200 million contract. On the verge, you already lost it for all practical purposes. Official communication ana baki hai. But you are still saying, chalo, no problem, we'll deal with it in our way. Third, you tell the customer that you will not be able to hire the project management company suggested by him. You're shutting the door on it. You're saying, nahi bhaiya, humko nahi karna hai, we don't want to do this. But you have an empaneled project management company that your company works with in the region. The customer is not happy with your answer. The assistant says, guys, I'm trying to explain to you that there is a way to salvage this. Forget it, you don't want to do it, no problem, thank you, bye. He goes away. These are three possible scenarios. Now, decision is yours. What do you think you will do in this situation? Will you take option A, the first option, second option, or the third option? Yes. Anybody?
I've got one reply as option B from Mr. Deepak.
Option B, okay. But the customer is not happy with you when you say that. You're telling him that you will put Pegasus Enterprises through a beauty parade. He's not going to be okay with that, no? You will lose the $200 million contract.
All the attendees who want to interact may raise their hand and I will allow them to on their mic, so it could be more interactive.
Sorry?
I'm asking the participants that if they want to have an interaction, they can raise their hand and I will allow them to talk.
Okay.
Through their mic. Yeah.
Right. This can move forward only with your inputs. So interaction is mandatory now.
Attendees are requested. Sorry.
Yeah, go ahead.
Attendees are requested to put their options in chat box so that I can discuss it with the speaker.
Yeah, you can say 1, 2, or 3, whichever way you want to present it.
Yeah.
Let's give it a minute and then we'll move.
Yes.
Are you getting responses?
Only one yet. I think rest are in that ethical dilemma completely.
No, there is no right or wrong answer. You can give whatever comes to your mind. It's not a real life situation and there won't be any consequences, I promise you.
Okay. So Mr. Deepak and Mr. Milan Modi.
Yeah, so this is Milan here. Are you able to hear me?
Yeah, I can hear you.
Yeah, I think this is a very, very hypothetical scenario in that sense, but nonetheless, I think what is required is really to understand is the customer arm twisting you, or is there a genuine issue, first of all, with the products which the company is going to supply and the timelines. So I think the more important question would be really to say that, are the products really faulty, and is the timeline issue which the customer is raising, is it genuine or not? Because if these are not genuine, then selecting any of these is out of question, because for all you know, it may be a trap. So I would really think that the person should, if he is obviously ethical and professional, he would want to understand a little more why the customer is behaving in this manner. And obviously the answer has to be between B and C, which obviously will upset the customer, but that's the right way to go.
Okay. Okay, so let's assume that that is the baseline response of most participants. That
There are other two people also who wants
Am
to.
I audible?
Yeah, please go
Yeah,
ahead.
Deepak.
Yeah, thanks, Shashank. Shashank, I believe the option B is the more balanced approach. You see, if I go with the option A or if I go with the option C, you see, ultimately these are the extreme ends. But you see, being a supplier, I have to also maintain a relationship with my customer, and I have to listen to his requirements also. I believe, personally, I believe that option B is the right approach, because if, let's say, something is wrong at my end, so it will also highlight, if I, let's say, I hire some right project management consultant, at least he will be able to tell me, okay, boss, the problem is at your end. It may, you see, ultimately, it may be a situation that I lose that customer. But you see, ethical customers works with the ethical suppliers only, right? And the similar way, ethical suppliers work with the ethical customers only. So other two options, if I'm an ethical supplier, I will not go with that. I will always go with option B. That's I personally believe.
Okay. Anybody else?
Bhavna, you want to add something? Bhavna, you have to unmute yourself and.
Hello, am I audible?
Yes, you're audible.
Yeah, so I believe that whenever the situation comes in real life, so we don't know from the perspective of the VP sales how somebody would decide if we keep in mind the fraud triangle or the pentagon, which we have just in the previous slide seen and understood. So I don't know of the three options, all three angles in the triangle and in the pentagon, 5 angles do fall in this scenario. So I believe that VP sales could have gone to angle A in terms of taking it as a pressure. So yeah, that's what I have mentioned also.
Yeah. So I think very interesting perspectives. One is to say that the first gentleman who spoke said about product quality, whether it's a genuine thing or it's being arm twisted. Second person said that if it's ethical, suppliers will work with ethical customers. In reality, we all know that the truth lies somewhere in between, right? That we all know that we are not living in a theoretical world; we live in a practical world, and there is a mixed bag out there. Even in the most ethical organizations, you will have unethical people. And even in the most unethical company or country, you will have ethical people. So there is no black and white. The world is 90% gray. 90% of the world is gray. Black and white is very, very little. So if it were a simple black and white, this answer would have been easy. In practical situations, in real life, there is a chance that this vice president will come back. He will discuss with the president sales, who will then take it to the board of directors, consult with the board of directors, see what they say, because sanctioning 5% of $200 million is not a small amount. It will require approval of senior people. He'll go to the CFO, he'll talk to the managing director, involve everybody, and then they will take a decision to go ahead with this. In the back of their mind, knowing fully well that this 5% fee is not necessarily for services, it is a potential indirect bribe. Tell me one person on this conversation who thinks it is not a bribe. I don't think anybody can say hand on heart that this is not a bribe. It is just going to be couched. It is just going to be layered. Even if you say option 2, they will hurriedly do something. I've seen this. They will hurriedly do something in one day, put through a beauty parade and select this person, Pegasus Enterprises. It is called favoritism, right? We see it happening all the time. We as I in my profession see it happening all the time. Vendor favoritism. Sudden emergency requirement, identify 3 vendors, give it to one of them. देना तो उसी को था, बाकी 2 को सिर्फ दिखावे के लिए. You got them just to show. So in such a situation, what do you think? Forget what you might do. The VP sales of Alpha Corporation. How many of you think VP sales of Alpha Corporation will not go ahead with option A? With enough consultation, safeguards, buy-in, approvals, fast-tracked, everything fast-tracked. Because they want to save the $200 million order. He'll say, I've got your solution also. जो हुआ सो हुआ, problem हमने solve किया. ये अभी, we have to do this. We have no choice. We can't lose this business. 99% of the cases, option A will be chosen by the company. You would have an odd 1% case where it will not be. And that is really what I talk about ethical dilemma in real life, where you have no choice, right? You have a gun to your head practically. So if you look at it, most people would choose either option A or option B. Some will choose option C, very impractical option C. Option B could be, but that also could be a couching, layering. But when you look at what other people will do, right? Everybody has responded to this. In past events, when I've done this ethical dilemma for large corporates, people say, I will do either A or B, but everybody else, if you look at this VP sales of Alpha Corporation, that person will do the first option. Now, what this means is that it's a very interesting thing, it's like, I'm okay, you're not okay. Each of us believes that we do everything right. Sometimes people may not do the right thing, right? Some of us believe that also. And that approach is what I talk about, theoretical versus practical. We know what the right thing to do is, but because of circumstances at times we will not do the right thing. We will justify, we will do the rationalization. That's the third tip of the fraud triangle. That is the most difficult hurdle to cross. Pressure सबकी life में है, opportunity सबकी life में है. Rationalization is the biggest hurdle to cross. And this hurdle is crossed when you're pushed over a precipice like this. You have to. It's either you sink or you swim. So that's really what is the biggest risk to a fast growing economy like India, where we are expanding across the world. We have no idea what the geographical risks are, which countries we are going into, what kind of people we are dealing with, what kind of companies we are encountering. I've given an example of Middle East and of Central Africa. There could be certain other parts of the world where basic safety is not taken care of. I've done a case where overnight the entire Indian management from a steel factory somewhere in the African continent was evacuated, right? Because the new government sent in the army to take over the factory, and they said all Indian employees out of this place. So that kind of environment we are all working in. So these risks are therefore prevalent and inherent to doing business. And many companies look at them as costs of doing business, which is what throws up a huge opportunity, right? The point I'm trying to make is I'm not trying to say this is right, this is wrong. If I were to do that, I should not be in this profession at all. I should not be a forensic accountant. People will behave the way they will in spite of your best efforts. And therefore it brings me to the point of profile of a fraudster, right? When you talk about a fraudster, most often a fraudster is in the age group of 36 to 55. 75% of fraudsters, this is based on empirical data. Greater than 80% of them are male, predominantly male. Is it that men are more, have a greater propensity to perpetrate fraud compared to women? We can discuss that. Greater than 67% are employed by the company. They are internal fraudsters, right? They are a threat from within. Greater than 68% hold senior or middle level positions. And greater than 45% have been employed in the organization for at least 6 years, some more than that, right? So if you look at it, this is what it is. This is a fact-based thing. This is based on research of over 500 or 600 frauds that have been investigated. Now, why is it that most fraudsters are in the age group of 36 to 55. 75% is a huge number. Why is that? Why are they predominantly men? Why are they from within the organization and hold senior or mid-level positions? And they've been in the organization for so many years. Profiling is a very important element of any crime solution, right? When you profile, you are able to actually focus your energies and attention on the high risk group of people. And therefore, you may eventually end up finding who's the main kingpin of a particular, because a fraud does not happen individually. Financial statement fraud or any kind of fraud happens with a collusion, right? Multiple people are involved. There is a kingpin. There's somebody sitting at the top of that pyramid. Other people who you might find are committing the fraud are not actually the main people, right? There could be other people higher up in the hierarchy who are perpetrating the fraud, who are masterminding the fraud. Why is it like this? Anybody wants to discuss this? A different perspective on this, on why it is like this?
Not why, but it's nearly similar to what the fraud pentagon you showed. Basically all the pointers somewhere or the other link with that pentagon. So for example, he's at a senior or middle level position. So that one of the arrogance part where he's at a senior level and there is no one who can. So all this directly linked with that that indicator part, wherein if I say it in plain language, fraud करने की हिम्मत आ जाती है, दूसरा पर्पस मिल जाता है. So if we define 36 to 55, it's the age where a person always wants to make more money, retirement save करना है. Then if we talk about senior management or a person more than 6 years, definitely he gets in that predominant position where he can have that authority to do it. And purpose could be anything. It could be from anything. So
Correct.
there could not be any sort of list for that purpose. It could be anything, but that goes around those pentagon which you stated earlier.
Sure. And why predominantly male? Are men more fraudulent than women? What could be the reason for this? It's a very, very stark, right? It's the highest polarization among the data points you see on the screen.
What from my point of view, one of the study which I was going through earlier, in India predominantly male, still definitely there is no difference between both, but still male are at a more senior positions in the corporates, and maybe that is the reason. I don't know.
Yeah, that's one good reason. Predominantly, if you look at corporate India, if you look at any set of CXOs, predominantly male, because of either how they are promoted, or women tend to take a backseat after a certain number of years because of childbirth, family responsibilities, or whatever. It's changing, but that happens as well.
And always it's a man who is put on the responsibility of taking the family and securing their future life. That is the pressurizing situation for that male, and that is where that mind.
Yeah, that is also there. What else? I've experienced one thing, that male fraudsters tend to collude more than female fraudsters. Most females, it's not to say that women don't perpetrate fraud. I'm not saying that they are more honest or dishonest. This is not a discussion on who's honest and who's more dishonest. It's just that male fraudsters tend to do collusive frauds. Women don't like to be vulnerable to other people in the organization. Therefore, they do not perpetrate more collusive frauds. They perpetrate smaller ticket frauds generally. They perpetrate frauds which do not have anybody else in the picture, and therefore they know everything there is to know. So there is no risk of whistleblowing. There is no risk of being caught because of somebody else's stupidity. It's you who are, it's like a sole proprietary concern, right? You are be all and end all. You're running your own shop, perpetrating your fraud, doing small ticket frauds. Therefore, the risk of detection is also lower. Whereas male fraudsters tend to do maker, checker, super checker kind of collusive frauds, whereby there is a risk that, one fine day the maker, who's the lowest in the food chain, will say, what, bahut ho gaya. You guys are exploiting me. I don't want to be part of this. I'm going to blow the whistle on you. And then he goes and tells the entire story of what happened in his whistleblower complaint, and they get caught, all of them, right? Usko jitna pata hai, he may not know who all are involved, but whatever visibility that lowest rung person has, he may go and blow the whistle. So therefore, you see a higher proportion of male. It's not to say that men are more. Of course, there are pressures which are societally put on men because of structure or whatever else, because of seniority and all of that. This is a fact, right? There could be multiple factors which go into this. Now, most are described as autocratic, right? They are 3 times as likely to be friendly. Autocratic means keeping people under their thumb, right? 83% are esteemed and they're well respected in their organization. They are likely to have colluded with others greater than 65% and not a lone wolf. Motivated by personal gain and greed, greater than 97%, right? I've yet to come across a Robin Hood fraudster who takes from the company, steals everything, and then gives it to poor people, right? There's a very, very limited chance of that happening. And most importantly, greater than 75% of frauds are identified based on whistleblower complaints, not necessarily conventional controls. Not internal audit, of course, is there. Management review is, of course, there, but they are a distant second and third. Greater than 75% is because of whistleblower complaints. Because fraudsters, like I told you, are great risk managers. They are great public perception managers. So anytime a fraudster is caught, people are in disbelief. They're like, are you sure this guy, I cannot imagine that he's capable or she's capable of doing this fraud. 100% of the times, every fraudster is a high performer and they have an aura of greatness. Remember what I told you about red flags? I said tip of the iceberg, people might notice it. People might think it's a red flag, it'll get brushed aside for this reason. They're like, boss, you are jealous of him. You are doing this just to bring him down. There is nothing to it, I'm telling you. His boss will support him. Either because he's also involved or because he's actually genuinely supportive. So therefore, for years, these people remain undetected. And something then has to happen where from balance of probabilities, it goes to beyond reasonable doubt. The trigger could be a whistleblower complaint or the person becoming so arrogant that they get caught red-handed, right? These two events usually have to happen. Or, there's a change in management or, there's a change in his boss and the boss says, what, people have come and told me so many negative things about this guy. I don't know how he rose to this level in the company. And then something is initiated. So these are 3 or 4 scenarios when something like this comes to light. Otherwise, people may even retire and live happily ever after without ever getting caught. That's the reality of life. Okay. On that rather somber note, the ACFE fraud tree, the Association of Certified Fraud Examiners, has come up with a fraud tree where it has broadly classified in corruption, asset misappropriation, and financial statement fraud, right? Asset misappropriation, as you can see, which is right in the center, is the largest, where it's basically talking about theft of assets. First is both outbound and inbound bribery, which is corruption. And third is financial statement fraud, which is effectively what allegedly happened in the case of Satyam and Enron and many of these companies. If you look at large cases in corruption, you have Siemens, you have Walmart, right? Bribery and corruption cases. Recently, Oracle was also fined some $23 million. I'm sure you've read about it, 28th of September, for bribery and corruption in India. In India, Turkey, and I think Middle East, somewhere in UAE and some other countries. I'm sure some of you would have read it in the news. And asset misappropriation is the run-of-the-mill frauds, right? Every company will have it to a greater or lesser degree. People stealing money, people stealing assets, over claiming of expenses, and so on and so forth. So these are the 3 broad categories of fraud. New generation frauds that you come across: phishing, piracy, cyber stalking, malware, cyberbullying, right? All these are really instances of, and when you look at this, right, this is like this is a forest fire, and how much are companies spending in terms of money? They're spending money on a drone. You can see what you see in the left-hand side top corner is a drone, which you're using to extinguish a forest fire. So it's highly inadequate, right? So if you look at it, if you look at the cyber fraud trends, and this is very important because, nowadays, CAs cannot say that, I'm only a financial statement auditor. I don't understand technology. technology is a reality. It's like 30 years ago, if you said, I don't know, I don't want to study computers, today you would have no work to do, right? Ledgers are gone. Those Chopra books that we used to have, those are gone. Even a local Kirana store will not have that. So being and embracing technology is the only way forward for us, right? Whatever age you might be at, 30, 40 or 50, you will have to embrace technology. So you can't say that I don't want, this is not my area of concern. So India has seen a 37% increase in cyber attacks, right? India also ranks 11th worldwide in the number of attacks caused by servers that were hosted in the country. Global damage due to cybercrime is projected to be 6 trillion by 2021. Of course, the data is yet to come. I actually did the count. It's 6 followed by 12 zeros. And the worldwide spending is what I was talking about, a drone trying to extinguish a forest fire. It is 2.23% of projected damage of 6 trillion, right? So it's huge in terms of numbers. So these are some of the different ways in which frauds can happen on the software side, on the cyber side. You could have malware attacks, phishing attacks, denial of service attacks. You'll have a CEO fraud or an invoice redirect. CEO fraud is where the CEO is the fraudster is trying to pose as a CEO. There could be hacking attacks. There could be farming, right? So these are different ways in which frauds can happen. And there are careers available in this also. If you are, you are technologically oriented, if you have interest in this area, this is a niche area for chartered accountants also. And you don't need to be an IIT engineer to get into this, right? I know a lot of CAs who are in this particular sphere of work, including myself. Any questions on this so far before I get into a little more detail on investigation techniques on P2P and O2C and financial statement frauds? Any questions so far?
Not yet.
Okay. So if you look at investigation techniques, usually, like I said, you will have early warning signs or red flags, right? Those are usually the shoots, the green shoots, right? Even an oak tree will come from a small seed, right? So any fraud, like the tip of the iceberg, will be visible a little bit on the surface. Now, how do you pick that and say, oh, this could be a fraud and this will not be a fraud? So in procure to pay, you do risk-based sampling, right? What is risk-based sampling? I'm sure all of you know. You do data analytics. You do attribute-based sampling. You can have different cuts to the data, right? Round figure payments, Benford analysis, keyword searches and narrations. It's called text analysis. Terms of business entered into, compare A vendor versus B vendor versus C vendor, payment schedules, price variations, economies of scale not available, right? Normally you have a price volume inverse relationship. Higher the volume, lower the price. Lower the volume, higher the price. But if you don't see that correlation, that's also a red flag. Then you look at transaction testing, understand the procurement process, look at the bid rigging risk, look at conflict of interest possibilities, where there's a vendor which is owned by the relative or the employee himself or herself. Look at vendor evaluation, potential vendor owner or relative, share of business volume, limited vendors, insisting that this is the only vendor I can go to, no other vendor. The user department nominating a vendor, as in I'm the user department, it shouldn't matter to me. I should be only concerned about the product that is bought, right? But I'm also nominating a vendor when I say that I want this particular product. Why? What is so special about the vendor? Value engineering, right? Understanding the cost basis for that price. On what basis am I buying something at a certain price? Do I know the underlying raw material price movement? For instance, if I'm buying some petrochemical, inevitably I'll have the price of crude as a quasi, right? To establish correlation, to say that if the price of crude has actually fallen in the last 6 months, why has the price of this raw material gone up? What has suddenly happened? Has it become a substitute for some other product or what? Right? So there has to be an explanation. Costing information of products and services. This is very important to understand. Now, you might ask me a question, Shashank, why is this relevant for us if we are not doing forensic accounting? Even when you're doing audit, even when you're doing internal audit or stat audit, it's important for you to check for these things because that will be your opportunity. You may detect a fraud, and then that might be an opportunity for you to start doing forensic work. And all the firms, all the big four or other firms that have got into forensic have gotten this way. One fine day, you don't just put a board saying forensic ka kaam karunga main, and you start getting work. You have to go there, you have to approach, go out of your way to find these instances, then that becomes your additional work. If you look at order to cash process, quality of the KYC checks if done, the customer credit evaluation before credit sales are made, right? We recently did an investigation of the company sold 10 crores of the material on credit to a customer who came to their factory to pick the material. And they went away and they had not done KYC. And then when we said, where is the money? They said, oh, we've not got it. Then we said, where are the follow-ups? Oh, we've not done. Then we said, okay, have you guys visited the customer's office? They said, no, this is in some godforsaken part of the city where it's dangerous for us to go. So we sent a person in. That customer does not exist there. There is no office address. It's an open plot of land. So God knows who came, bought, went away on credit. It smelled very, very bad, right? It all looks really odd, this entire modus operandi. So it was very obvious that the local branch regional management were involved. And then we did the computer forensics and we found that there were many arrangements. We found bank statements where the vendors had transferred money into their account, right? When we password protected, those files were password protected, we cracked them open. We found those kind of transactions. We saw cash depositions. We saw email communication with the vendor, right? So it was obviously a case of management in getting involved in that fraud. It was a collusive fraud with a third party. So these are some of the issues. If you look at financial statement frauds, I mean, I'm sure all of us have seen this in some form or shape, reporting fictitious or premature, which is earnings management, advancing revenues, bogus revenues, bank balances to show higher profits to ramp up share prices. Classic what allegedly happened in the case of Satyam, right? Where they showed higher revenues, bogus revenues, and then they had to show collections and they had to show bank balances, right? To raise fresh equity or debt funds, right? So that they are able to generate more money by diluting less equity. Over invoicing of asset values purchased to siphon off money through equity or debt, right? Underreporting of related party transactions, which may not be at arm's length or at arm's length prices or terms. Credit sales being falsified and the resultant debtor balances being written off in due course, right? They may transfer it from one debtor account to another debtor account, put it in some pool, and then it gets lost, right? So there are so many ways in which these things can get, through accounting jugglery, can get moved out of inconvenient accounts. Pre-IPO, there could be a sudden bloom in the financial results, right? We've seen that happen in the last 1 or 2 years. When many of these .com companies, which had otherwise not generated profit, suddenly before the IPO, they got a fabulous result. Went IPO in the next quarter, the results tanked again, right? The financial ratios that are out of whack, right, which are not in sync with what reality should be. For instance, we compare with competitors, we'll find that the profit margin or the debtors turnover or the any sort of leverage ratios are way out of sync. So those are all red flags. Deferring expenses to future periods to hide actual performance results. A big company having an unheard of audit firm, right? And they being paid, minimal audit fees or extremely high audit fees compared to the size and scale of the business. These are all red flags. I'm not saying just because if it's a small firm or a mid-sized firm, this is the problem, but one needs to look at the audit quality also, right? So all those things are important to understand. Significant or unusual changes in the asset liabilities, sometimes to restructure the balance sheet, carving out businesses. What was happening in Satyam was they were trying to acquire those businesses, right? They had to show that this money that we have in our balance sheet is being utilized to purchase these businesses. And those businesses belong to the promoter, right? Metas, there were 2 companies, which are opposite of Satyam, Metas, spelled in the reverse order. So they wanted to acquire those companies and they wanted to show utilization of a non-existing fund to acquire those companies in an unrelated business. What does a software company have to do with infrastructure business? So in what manner am I trying to, sometimes it could lead to hiving off of businesses also, right? Either highly profitable businesses or loss-making businesses could be hived off to, hide all the losses there and then, kind of just brush it under the carpet. Increasing revenues without corresponding changes in cash flows, right? You will see increasing revenues in year after year or quarter after quarter, but you may not find an increase in the cash flows. And then, debtors balances keep ballooning and then one fine day you write them off. So these are all issues which you find. And then finally, off-balance sheet liabilities, which are housed in complex structures or hidden contingent liabilities. What was classic in the case of Enron, they kept a lot of debt. They acquired a lot of money on, through loans, and they kept all of them off the balance sheet, right? If you ever research the Enron case study, you will know that this is how they kind of kept everything outside the books. And the auditors allegedly also helped them, right? So any questions so far before I move to the investigation life cycle?
Not yet.
No questions?
Yeah, no questions.
Okay. Am I doing right in terms of speed, coverage? Do you want something else covered? You please ask me, because it's got to be customized to your expectations. Is it going fine? Do you think the pace is okay, the coverage is fine, or do you want to see a little more of something else?
As far as the designing of this thing was concerned, it is going according to it, and there are no otherwise suggestions from the attendees. So I think we are going in a completely right direction.
Okay, good. Thanks for that. When I look at investigation life cycle, typically, we get called when a client gets a whistleblower complaint. They call us and say, you know what, Shashank, here is this complaint. We've got it from, we don't know who. It's probably, they put a name on the letter or the email, but we know that it's not authentic. Now, can you please look at this and send us a scope of work, right? So scoping is the first step when you're trying to draw out what you want to cover. And the areas that you need to cover will depend upon the facts and circumstances of each case. A, the access you have. B, the secrecy you need to maintain. C, the seniority of the person. D, the actual nature and the sensitivity of the case being talked about. E, how many people you think might be involved. Is it a lone wolf? Is it multiple people? F, the disruption that it might cause to the business, right? All of these factors need to be taken into consideration. The last being the most important, right? I don't want to rock the boat. I don't want to disrupt the business in such a way that the company, somebody just blows a whistle and the company has done things very, very radically, which have caused the entire business to come to a halt, come to a standstill. That's not the ideal way to approach it. So scoping has to be done in a sensitive manner. You need to plan the review steps. In what manner? Will it be phase wise? Will it be A, B, C, D, E, or will you do all of them together, right? Do you want to bunch them? Do you want to, logically separate them through phases? So if you look at the field work, usually what we start by doing is the computer or digital forensics, right? Where you need to quarantine the data for a wider group of people. Suppose you believe that, in a department there's a complaint that has come as a whistleblower complaint. You need to be able to identify who could be potential people. You may not do investigation on all of them, but you still need to start quarantining their data. By that time, you need to do the computer forensics and keep digital images of their computers so that tomorrow, or put the data on a legal hold. A lot of software, a lot of backup software have what they call legal hold. What that means is that even if the person starts deleting emails and data, it does not get deleted in the backup. It stays there. It will get deleted only on the person's computer, not in the backup. So it's called a legal hold. Another approach could be, if the company doesn't have that method, is to quarantine the data. Then identify the initial target list and go about the keyword searches and review of electronically stored information based on keyword searches. Data analytics, right? Understanding what is an anomaly in a given circumstance, right? What is the anomaly that is being talked about? And then analyzing the data to identify those outliers, right? It's like not knowing what to look for and knowing what to look for, but not doing it effectively, right? Both are equally bad. Now, not knowing what to look for could be a situation you might encounter in an investigation. But once you know what to look for, you need to actually exercise that knowledge. You need to evaluate what you need to do to identify those cases. So which essentially means is attribute-based sampling, right? You need to know what attributes you're looking for, and then you need to run the data analytics queries. And then finally, transaction testing, right? The data analysis will help you get the samples that you need to test for fraud. So when let's say you have 8 attributes, right, or 10 attributes of a particular fraudulent transaction. Now, it could be a transaction with a certain vendor or a certain set of vendors. That could be one attribute. Second could be, it could be for a certain raw material or product. Second attribute. Third, it could be a certain buyer who has been named in the whistleblower complaint, right? His transactions or her transactions you will look at. Fourth, it could be transactions from a certain market that they have bought from. Could be Far Eastern market. They would have bought certain products from a certain set of vendors from the Far Eastern market. Fourth or fifth, they may have bought it using, the allegation could be around bid rigging, to say that, oh, they got competing quotes, they got some quotes from bogus vendors. So that could be another attribute to say what is the definition of bogus. How do you identify a vendor as being bogus? So using these 5 or 6 or 10 attributes, you will analyze the data and then find potential outliers, which you will do transaction testing for. And when you do transaction testing, you'll typically look at it from A to Z, from beginning to end. You may not select 500 transactions to review. You may select 5 or you may select 50 transactions, but you will do an end-to-end review, right? Not miss any step in between, because those will be representative of what you are looking for because of the attribute-based sampling. And then you will carry out field intelligence and surveillance. Now, this is a difficult phase of an investigation because you need to identify which targets you need to do surveillance on, and whether you need to do drive past or penetrative checks. Drive past means you just go past and see whether a vendor exists. Like I gave the example of that North company where we went and we found that they didn't have an office. A penetrative check would mean that when you see the office existing, do you enter the office? Do you pose as somebody? Do you do mystery shopping? Do you ask them questions, right? And try to garner intelligence from them. So that brings me to covert market intelligence. When you do penetrative checks, you do discussions with various stakeholders. You may have multiple layers of covert operatives, right? You may have a first level, a second level, a third level to build trust, right, of the target, to be able to gather intelligence. Doing due diligence on the past background of red flag targets, right? What is the basis? What was the introduction into the company? Who introduced them into the company? What was the diligence done? Was a vendor evaluation audit done? Who went and did the audit? Is the same person who's eventually deciding how much buy? Are they members by marriage or otherwise are they related to each other? And then finally, once you've gathered all of this, you do a confession-seeking interview with both the third parties, could be the vendors, could be accomplices, and the main targets. You sequence it in a certain manner so that sometimes you may do it sequentially, one after the other, or sometimes you may do it in parallel. In 3 different rooms, you may have 3 different people sitting. Each of them is being interviewed, right, at the same time. And then you are feeding off each other. What you get to know from one person, you're validating with the second and third person, and likewise with the other 2, right? So it's a very complex and comprehensive way of approaching this, because you're looking not just at financial transactions and financial data, which is there in SAP or hard copies, but you're looking at many other things, right? And you're trying to create it's like a jigsaw puzzle. As children, we used to play jigsaw puzzle or Lego. It's like a set of Lego blocks. You don't have a map. You don't have a book which tells you how to go about fixing which pieces together. You have to do through trial and error at times, right? The only the equivalent of a Lego map you have is the whistleblower letter, and what you eventually discover from the company also. What is the person's role and responsibility? What is their personality? How do they work? In internal audit reports, have observations come against these people, and so on. So once you do the profiling, it's then important for you to follow through on that. And then the reporting and next steps. What action to be taken? Additional targets emanating, new names coming up, right? Wording of reports is very important. You can't do kite flying in reports, right? When you write a report, it's got to be entirely fact-based, because what happens otherwise, you'll end up burning your fingers or you'll end up sticking your neck out. The target can easily file a complaint against you with the CA Institute for professional misconduct. What stops them? Kichad uchalne mein kya jata hai na? Person can actually go and file a complaint against you saying that this person has done this work, maligned my name, done blah blah blah. So your fact orientation, tomorrow you should say, "Arey jo bhi aaye, I will explain to them why I have written this in the report." So you need to have your work papers in order. You need to have your underlying facts in order. Everything needs to be tied in. If possible, get a second partner or a second CA, experienced CA, to review your work. It's not below your dignity. Even if you're a sole proprietor or a small partnership firm, you can still get a professional colleague to come and review your work. Of course, get them to sign an NDA, right? But get a 4-eye review done from a peer, right? It's very important, because this can potentially go to a court of law. This can potentially go to law enforcement. This can come back to haunt you. You may be called upon in a court of law to explain this. You may be called in a police station to explain your report, because the client may file an FIR on the basis of a first information report on the basis of your report. So you have to go and sit to the cops and explain to them. You can't be fumbling and stumbling at that time, right? Then eventually you will get called in a court of law. You'll have cross-examination happening. The opposing counsel, his lawyer will cross-question you, just to prove that you've done your work in a crappy manner, right? That's the whole objective, to defeat the purpose of that report. If if the report doesn't have two legs to stand on, if your credibility is questioned, your independence is questioned, that's the end of it. The court is going to say this report is invalid, I will ignore it, right? So you need to really ensure that this all operates in a manner, while it's a difficult set of circumstances, they operate in a manner where the company is not disrupted, right? The company, the rest of the employees continue to stay business focused. Even the people against whom the case is going on, they are not disturbed, because you don't know what the outcome will be, right? You may find 3 out of 10 issues. Some may not be able to withstand scrutiny. The company might say, you know what, we didn't find enough, let's go back to business, right? In some cases, you may find something, they may decide to ask the employee to resign. If they find more, they'll terminate the employee. If they find even more, they'll go legal against that employee. It really varies. So in the interim, you don't want to do, like they say, trial by media, right? You don't want to do trial by, people openly talking about it. So secrecy is very important, both within the team that is working on the investigation and within the company, right? You cannot talk to, you meet somebody at lunch and they say, "Arey, kya kar raha hai yahan pe?" You say, "Nahi, main investigation kar raha hu yahan pe." Your senior manager or your CFO is under investigation. That's not acceptable, right? Secrecy is very, very, very important. It's not like an internal audit. I know people who talk on their phones in the lifts and when they're walking in the corridors, they don't realize it. Sometimes they're wearing earphones and talking, this shouting at the top of their voice without realizing that other people can hear what they're saying. So this kind of secrecy maintenance is very, very important, right? If you look at the types of interviews, we talked about both covert interviews and overt interviews, right? Covert interviews are avoidable unless a person has enough experience. They're risky field interviews. They're outside the company. They're outside the corporate domain. They involve a little bit of psychology, social engineering techniques. You need to be able to build trust and confidence. There is a risk of exposure, which means that you may have gone in as somebody else to talk to a vendor, but you are saying that in reality you are not that person, right? So you need to have a good backstory to fall back upon, right? There could be a risk of physical attack also in cases where the person thinks that you're somebody else, and there could be mental and sometimes physical stress that builds, right? If you have to escape from a situation. Overt is done openly. It's usually at the end of an investigation. It could also be an information gathering interview in the beginning or somewhere in the interim. Now, interviews could be with third parties or staff, could be with accomplices and main targets, like I explained before. It involves a certain pre-agreed plan or approach based on facts and findings. Like tomorrow, I'm traveling to Bangalore early in the morning to do a target interview. We have prepared a detailed questionnaire, all the questions, it's a funnel approach. We are asking a lot of questions, and for each of those questions, there is a dossier. We have created a dossier, which is a very organized Excel spreadsheet, questions and linked artifacts that we found during computer forensics or any other market intelligence or whatever. So that when you ask him that question, he gives a particular response. You have the backup ready to say that, okay, you've said this, but here, can you please explain this? So you're not struggling and fumbling for papers, right, in your box files. So organizing yourself is very, very important, right? It's like an intense game of chess, right? I'm sure those of you who play poker or chess or it's very, very important. It's a mind game as well, right? You need to be able to press the right pressure points. Could be social, could be familial, could be prestige, could be upbringing, right? You need to be able to touch the right chord with the person. And there is something called, in interviewing, there is something called rapport building interview. You don't do it like the cops. You don't attack them, scold them, chastise them, make them look bad. That will never work. Never, ever. You need to be able to build a rapport with your target. You need to be able to give them the belief that you are a friend. You are there to lift them from their misery, right? They're holding on a heavy weight of a burden on their head of getting caught. So they've got caught now. They've got to be told that, chalo, accept it, no problem. These things happen. People make mistakes. We found everything that we had to find. We have enough and more proof. If you cooperate, the company will not take any action against you. Why do you want to spoil the rest of your life? You're young. You have 30 more years of your career left. Please focus on that rather than trying to fight this case, right? So that's how we end up getting a person to confess. So when you're planning, you need to have, like I said, the dossier preparation and so on. And the location of the interview needs to be comfortable place. You cannot have it in a noisy background. Don't have it in a coffee shop like a Starbucks or a cafe coffee day. You need to start the interview on time. Never go into an interview impromptu or overconfident. Always be quietly confident. Don't be arrogant, or be well prepared. Very important. You need to have confidentiality memos, etc., signed, audio video recording and all that memos, so that they give you permission to record this, right? Ensure that the equipment is in order. These are all basic hygiene factors, right? There are legal documents also that need to be signed, like chain of custody. When for instance, if you want to do mobile forensics and the person's mobile, you need to get a chain of custody form signed by that person and take the document, take the asset properly, legally. Otherwise, it will become invalid in the court of law, should the company decide. And then return it also with the chain of custody signatures. And then be relaxed, start it on a steady pace, open-ended questions, why, when, where, who, all of that. And then slowly kind of move to that position of checkmate, right? But do not spring. Even if you have all the evidence, do not directly attack and say, "Hamare paas ye sab kuch hai, abhi bolo," openly. So he'll say, "Sorry, I don't accept anything that you're doing," because you've not spent time to build a rapport. So some interviews may take 3, 4, 5, 6 hours even, right? So never appear self-righteous, never appear holier than thou, right? Show empathy. The best interviews are where the interviewee confesses and feels a sense of liberation. That's very important, right? So with that, I'll move now to the final stage of my presentation, which is the case studies. Any questions so far on what I've covered?
No.
Okay, so now let's spend a little bit of time to talk about what part of this can if let's say I'm a SME practitioner, what part of this can I take away as something that I can potentially put to use, and how do I get started? Right? Some of you will have that question to say, how do I get started in this? So there are courses that you can do. There's experience that you can get, like the CA Institute has a course. Plus there is the Association of Certified Fraud Examiners, which has the CFE course, a Certified Fraud Examiner course. You have that. You can work with, firms, mid-sized firms, bigger firms, as somebody who can help with these sort of cases. You can empanel yourself in different forums which are available, where you can be an empaneled person. Because of your experience, because of your education, you may get an opportunity to work in that area in forensic accounting. You may also get into arbitration. That's another area which is very important, right? Where there is an accounting expert, it's called an expert witness, or there is a witness of fact, right? Witness of fact, or so there's in an arbitration typically, right? When there are two parties who are fighting a case, it doesn't go to the courts necessarily. There could be an arbitration clause in the contract. They may want a independent expert coming in and quantifying. So typically, let's look at a joint venture, right, which has gone bad, right? Or let's say joint development in real estate, which has gone bad. One person has terminated the contract. So one person is the claimant and the other person is on the other side. So if I'm putting a claim against somebody, I need to have a fair basis for it. What is the fair basis for it? What are the assumptions that I want to make on my discounted cash flow calculation? In terms of, let's take a real estate company as a case in point, right? There's a landowner and there's a developer. Now landowner cancels the contract. The developer has to make a claim to say that, oh, you cancel the contract. What about my loss of profit? You have to make good that, because you've unfairly and unauthorizedly canceled the contract. So then they get into that, and somebody like a chartered accountant will step in to quantify the loss or to quantify the damage that is caused, right? So that is another very interesting area of work, where you work very closely with lawyers. You sit in front of judges, you sit in front of retired Supreme Court judges sometimes, and it's a very, very structured way of approaching. You have your given allotted time, you go and sit before the arbitrator, the panel of arbitrators could be 3 or one, sometimes 5, and then you have the opposing counsel asking you questions about your report. So that's also another area of upcoming work. Then you have mediation. You can work as a mediator as well in a dispute involving two parties, where you are kind of playing the role of a friendly arbitrator, somebody both parties trust, and because you are independent, you are getting a view from both sides, and then you're presenting your way in which they should approach this. This is a bit of a tightrope walk. You need to have a certain level of a reputation in the market. You need to have a certain skill in the market which people recognize, and you need to be trusted by both sides, right? So that is one more way in which you can engage yourself. Of course, investigations I spoke of, not just financial statement, but in the area of cyber as well. So the amount of learning you can gain, and there are so many free courses available on Coursera. Some of them run by Ivy League colleges in the US, which are free, literally zero cost. All you need to invest is your time, and so much material is available in the on all these edtech platforms that you just need to identify what it is that you want to do. And I do that with my team every week. On a Friday or a Saturday, we have 5 hours or 6 hours of actual training where each and every team member undergoes that, right? We identify, we've got a calendar of what topics we will cover. It could be anything from artificial intelligence to data analytics, to ESG related topics, just to broaden the horizon. It could be something to do with cyber security, cyber forensics, ransomware. All of these are just things that you keep hearing on a daily basis, but you don't have the time or maybe the inclination to deep dive on them, right? So it's very important that you actually do that. Right. So I will now start this part of my session, where these are 6 investigation cases, and we can look at how, in what role the investigator will play in this. So this is a window dressing fraud in a mergers and acquisition situation. We all know what window dressing means, where the impact to the buyer was $150 million, which means they were induced to pay $150 million more than they should have paid. Why? Because the seller company did window dressing and they falsified their results. So what had they done falsification of? They had done falsification of sales and production before stake sale to the investors. Now, one might obviously wonder, there would have been a financial due diligence, right? So during the FDD, and FDDs are usually done in a very hasty manner. I've noticed that as a forensic accountant, I'm not comfortable with, the speed or the depth at which sometimes FDDs, I'm not generalizing and saying in every case, but in some cases where both parties are eager to go ahead with the deal, usually the FDD is done in a quick and dirty manner. In this case, during the FDD, there was concealment of information, and some financial information and production data was concealed and not provided completely and correctly. Now, the buyer was induced to pay $900 million for the stake that was worth $750 million, going by the agreed EBITDA multiple. Now, this issue was discovered a few months later because window dressing has a lag, right? When you do window dressing, when the actual results start coming, there is a certain vacuum, because what you produced and sold, and the selling management was still in the driver's seat. There was a transition period. So there was an earnout, right? Through the earnout, they had to actually show the results on a continuing basis, but it was a lot of the purchase consideration was front-ended, which means they got paid a majority of that right up front. But when the results started tanking, that's when the investigation was initiated. And because of the reps and warranties clauses that they had in the shareholders agreement, as an outcome of the work done, the management was dismissed. So the way the work was carried out was to actually triangulate to check if I have sold it, I would have produced it. If I would have produced it, there would be a production log on the shop floor. If there was a production log on the shop floor, I should find a handwritten sheet by the labor supervisor or the foreman allocating work to the different shifts. Raw material should have been bought, consumables should have been consumed, my machine logs, right? My process control machine log should also say that this was the production quantity that was achieved. None of that was visible. which during an FDD is not done, by the way, right? FDDs don't go in that level of granularity, which is why it's easy to perpetrate a window dressing fraud. It may get discovered, sometimes it may not, right? So like they say, Dulhan ko saja ke, they pretty much wanted to polish it off, right? At a much higher valuation. And that happens. We as small investors don't get to know when a company comes IPO, the extent of potential window dressing risk we are encountered with, right? But maybe it happens to a greater or lesser degree in certain companies, which is why after the listing and after the first 2 quarters, we see the stock price tanking, right? I don't want to take any names, but I'm sure each of us has seen numerous examples of that happening in the last 12 to 24 months. Next is the concealment of fraud and claims by investors in an M&A situation, a mergers and acquisition situation. This was a impact of $25 million. It was an acquisition of a bank acquiring a broking company. The investor or client claims were filed due to frauds by a group of traders. So there were some branch managers and some traders who had perpetrated some fraud, was alleged by some of the investors or clients of the broking company. Now, these investor claims were concealed by the seller during the financial due diligence. These were in letters which were written to the company. They had some complaint registers and all. During the FDD, they had actually generally asked a question, are there any investor complaints or any sort of issues, when this was not disclosed, right? This was discovered during internal audit after the new management took over, right? And when this was discovered, it became like a tip of the iceberg situation. And when you actually, dove in, we found it took us 6 months to do this investigation. And we found the value of claims were significant. And through a complex maze of transactions, losses were concealed, stocks were moved from one account to another account through beneficiary or pool accounts, right? This was before all this digitization happened. And there was then an arbitration initiated because the money had already been paid. So the arbitration was initiated and the award of $25 million was given. And then our client actually got the check as well, right? Because usually arbitration awards can also get contested in the court of law. In this case, they were able to get the money because both parties felt that it was the fair thing to do. Any questions on these two before I move to the third? Okay, so royalty, I'm sure all of us know what royalty payments are. So royalty payments are essentially, money that you pay for using a company's brand and selling it in the local market. So there was a sporting goods company which had, royalty payouts that were required to be done. And the extent of the manufacture and sales were underreported by the licensee. And they had excess production which was sold by them in the gray market in neighboring countries or exported as seconds, right? So they had actually, suppose they had to show 1 million pairs sold. They showed only 800,000 or 600,000. They underreported production and sale because they were doing everything from sourcing to everything locally, right? So they underdisclosed, and this was discovered during a routine audit of the licensee facilities after 5 years of license agreement coming into force. So this right to audit clause existed, but it was never activated because India was a fairly small market for this global player. And therefore they felt, let's test the waters. They had identified somebody who was he had worked in some other country in one of their entities. So this guy set up a shop because he had a family business in that area. And then this particular fraud happened and the company had gone ahead on the basis of trust. 5 years, they didn't do an audit. And then there was a royalty claim for the underreporting, which was to the extent of $18 million. This was again an estimate. In reality, it could have been a lot higher, but this they readily agreed to pay, right? Usually when a person readily agrees to pay something, it's often a case of the actual amount being much higher. And they usually accept this because they're happy with it. It could have been maybe $40 million, but they agreed to pay $18 million. So this is another case of royalty. But the point I'm trying to make is you may have a right to audit in your contracts to third parties, but how many companies actually exercise that right to audit clause? Many companies don't have a right to audit clause even. And those that do not exercise that right to audit clause. Now, when you exercise the right to audit clause, you may discover something. And if you are an auditor or internal auditor, you should actually insist that this sort of clause is both implemented and it is exercised, because only then will you potentially come across such instances of fraud, and there could be an investigation opportunity for you. This was an anti-bribery and corruption by using a third-party intermediary with the full knowledge of company insiders. So this was a third-party intermediary for a US company's Indian subsidiary. Third-party intermediaries, as the name suggests, a third party who's an intermediary between the company and another entity, right? They play the role of a middleman. Now, in this case, there were anti-bribery and corruption clauses in the third-party intermediary contract, specifically prohibiting B&C, bribery and corruption, right? This is also a good to do thing. One is the right to audit. The second is the bribery and corruption clause. Now, there was a whistleblower complaint which alleged that there was large-scale bribery and corruption. So, of course, that led to an investigation. And when you do an investigation, you don't take things at face value. You adopt a very, very high level of professional skepticism, but you don't go about disbelieving everybody. It's just that your professional skepticism is on the higher side. And then the investigation that was carried out proved that there was a breach of bribery and corruption clauses. And the company officials were also in collusion. They were in collusive arrangements with these third parties. So along with outbound bribery and corruption, there was inbound bribery and corruption also happening. And this was going on for many, many years. And employees were also lining their pockets. Like in the case of Oracle, you would have read the Oracle case from 2011, where employees had, when saying that we need to pay government officials bribes, they had provided for that, but the intermediary, the third-party intermediary, had also transferred thousands of dollars to an entity which was set up by employees of the company. So while telling overseas management that we needed to pay a bribe, they had kept some portion of that for themselves also. So that's a form of inbound bribery and corruption. So this really relates this is a very classic known way of perpetrating a fraud, both outbound and inbound bribery. And this led to triggering of reporting obligations, and there were fines against the company officials and the vendor as well. And the company had to go through a remediation process, implement controls, training programs, annual compliance confirmations, and regular audits by a third-party independent firm to come and report to the global board that what was going on in India was not continuing thereafter. So this was another case. This is a classic. I gave the example of an invoice redirect or an authorized push payment fraud, where typically you may have an invoice with an overseas entity. Your client may get an invoice for material that the vendor has supplied to your client, saying that, okay, you need to pay $500,000. So the invoice comes through, and a few days later, an email can come through saying that, we've changed our bank account. We now moved from, say Development Bank of Singapore, we moved to HSBC, right? This is a new bank account. Now this email has come from the person who usually communicates with your AP staff. Now this email comes through, and this AP staff acts in good faith. And since your company does not have a very sophisticated mechanism, it's just an Excel spreadsheet for all the payments that need to happen to overseas vendors. The Excel spreadsheet is uploaded on the bank's portal, right? So the same process is done, and then the vendor is paid. And you pass that accounting entry, go back to your regular life. Just that 3 weeks later, the vendor writes to you saying that, hey, but where is my payment? You haven't paid me. You were supposed to pay me. The payment due date was last week. Here is my DBS, my Development Bank of Singapore account, and you've not made the payment. And the AP staff is like, but I just made the payment last week. You wrote to me saying that, or 3 weeks ago, you wrote to me saying that your bank has changed from DBS to HSBC. The guy says, sorry, I've never written an email like that to you, right? And you go back and check that, the accounts payable staff goes back and checks and finds something odd about that email that came through in hindsight, right? In this case, the employee was also involved. And what had happened was the email that had come was a spoofed email, right? You know what a spoof email is? A spoof email is something which seems like it has come from one company, but in reality, it has not, right? So for instance, if you say abc@xyzltd.com is the domain name, you might, the spoof email might actually either have that specific email address with a masking, or underlying that email address they would have @ of ABC Ltd right? So they'll create a new domain with just the I alphabet extra. So to a reader, when they get that email from this person, they will not know that this has come from a fraudulent source, and the person may act in good faith. Therefore, it's important to educate. And as an outcome of these particular attacks that keep happening, sometimes company insiders are also inclined to say that, yes, we also had such an attack and we are the victims, right? They may say that we were the victims, we did not realize that it is a spoofed email, and we went ahead in good faith. But in this case, we found through computer forensics and review of transactions and email communication that the employee was also involved. The employee was also involved, and the employee's relative in the UK was the person who was also involved. And we found through metadata analysis, which is the properties of the files, we found the date and time stamp, we found the original email, we found the computer logs of visit, the person having gone to that new domain name that was created with the alphabet I, and having sent an email from that email ID to herself. Right, so we found that particular thing, and again here there was no collusion with company insiders. It was a lone wolf. The fraudster was a female employee, so there was no collusion. So the only reason this was discovered was the company, realized a few months later that, and we also found when we were doing computer forensics that this person was about to migrate to Canada because of the pandemic. She was not able to go. Right. She was not able to go because of the pandemic. Otherwise, she would probably be totally out of reach. So this was another case of authorized push payment fraud. And lastly, our quite repetitive and famous frauds that happen, where large borrower borrows money from a consortium of banks. Large borrowing supposedly meant to be used for certain projects, but the stated purpose of the loans is different from what it actually gets applied for. Through trade-based money laundering and over-invoicing of capital assets imported, this money is siphoned out of the country, and the funds are used for purposes which are other than the ones that were intended as per the project plan. And finally, when you look at what happened, you find that out of the $1.2 billion, only about $200 or $300 million were actually put to use, whereas the remaining money is nowhere to be traced. And the company's business is, of course, not the intention of setting up this project was not to set up the project, but to use that as a smokescreen to transfer money out, to siphon money out. And there are numerous examples of this. And when you have consortium banks triggering personal guarantees of promoters, sometimes the promoter does not have too many assets. So there are, protocols like asset tracing that you need to do to see, that he has a, Boeing 747 aeroplane sitting in Nicaragua, that he has 5 shell companies in, Isle of Man, that he has foreign assets in Singapore and Hong Kong, that he has land holdings and real estate holdings in certain parts of the country. So there are those kind of asset tracing protocols that you need to establish to be able to identify what happened to at least some of the money, if not all of it, right? Because the person will have some consumption. When they make $800 million free of cost, they will have some consumption that happens as an outcome of that. Purchases of houses, of cars, of aeroplanes, and so on and so forth. So that is something that can be identified through asset tracing. So this is a combination. So the point I'm trying to make is that forensic investigation is very, very interesting. And I'm glad I accidentally or otherwise I came into this career. And I've been in this, and I cannot imagine doing anything else, because it really keeps the excitement level both in my team and I going, every day. It's like a hunt. You go out on a hunt every day. You of course wear your hat of being an independent accountant and so in a forensic investigation, typically you don't have only accountants working. You have people who come from, so I've got an IT engineer in my team. I've got a bunch of lawyers in my team. I've got people who've done the sociology, couple of people who've done psychology majors, which are very useful in an interview when you're doing a profiling also, right? So former police officers and so a wide array of people who work in the forensic sphere. So it's not just a CA. Of course, 30-40% of my team comprises of CAs, and pure play financial fraud investigations, we'll have CAs and MBAs work on them. But we also have a lot of other types of frauds, technology frauds, which are increasing. During pandemic also, we saw a huge spike in the technology frauds. So all of that is really causing, you need to have horses for courses, right? You cannot have a one size fits all sort of team profile. And again, for every project, the team composition will vary based on the facts and circumstances. It won't be an identical team composition for all investigations. So broadly, in terms of the quick wins, fraud risk mitigations, these are very important. I talked about the ABC and right to audit clauses. You could have ABC, you could have classroom or computer-based training, CRS classroom and contracts by the accounts payable team. Oftentimes the AP function is approved. They have a TAT, turnaround time, to approve whatever 30-40 invoices per hour. So they go about achieving that. There is a quality then, monitoring the quality, doing whistleblower training programs, doing proactive digital forensics, doing ethical dilemma sessions, that Alpha Corporation ethical dilemma that I gave to you, doing such sessions, doing more immersive programs, right? This can be ways in which you can get work for yourself, right? You need to trigger thoughts in people's minds, because you can't tell somebody that, oh, you must be encountering fraud. They'll say, sorry, you're out of your mind. I've got all these controls. Remember the slide about the iceberg, right? You'll get an iceberg response from them. You'll say there's no fraud here. That's what they'll say to you. So you need to put them through situations which help them understand that yes, their company could also be encountering fraud. And finally, you may have, your companies may have whistleblower hotlines. If they don't, you should encourage them to implement whistleblower hotlines, because that's one sure shot way for companies to start getting frauds reported, whistleblower complaints. And I'm sure a lot of you are big fans of Warren Buffett, the world's largest investor who owns Berkshire Hathaway. He himself said that, if his investee companies had whistleblower frameworks and whistleblower hotlines, they would have been valued at much more. Because at a net level, what does fraud cause? Of course, the tone at the top is spoiled, the culture in the organization is spoiled, ethics and integrity go for a toss. But equally importantly, it is a financial loss account and my balance sheet, and it could help the company be a more valuable company. So he even recognizes that. And finally, professional skepticism, not blind trust, and hope and pray for the best. Only after you have done the best you could for your companies that you work with. So I think broadly that's what it is. It's a little bit about me, my profile. I'm available on LinkedIn. This is my LinkedIn link. My mobile number and my email address are there. If there are any questions, I'll be more than happy to take them right now.